G'day folks, welcome back to another update for natural gas. Now the price is still rising on the markets for natural gas. It's hugging that diagonal ascending trend line. Before we go any further, make sure you hit that like and subscribe button to support the channel. In terms of looking at the outlook, as of today, February 12th, the rising energy demand consumption, the proliferation of AI technologies has led to a surge in data center construction, significantly increasing electricity consumption. Projections suggest that data centers could account for up to 21% of global energy demand by 2030, with a substantial portion of this demand being met by natural gas-fired power generation. Infrastructure developments. To meet the escalating energy needs, companies are investing in natural gas infrastructure. For instance, plans are underway to build natural gas plants dedicated to powering new data centers, ensuring reliable and efficient energy supply. And in terms of market implications, the intersection of AI growth and energy demand presents opportunities for natural gas producers and related industries. However, it also raises concerns about environmental impacts and the importance of integrating renewable energy sources to create a balanced and sustainable energy mix. So looking at the natural gas commodity price first off, we look at the monthly, the weekly and the daily, and they're all showing signs of bullish movement with the weekly, the fresh breakout. First looking at the monthly, I've got these moving averages first of all. For those new to the channel, you can draw those from on your own charting software. There's a video attached in the description below. Just reference that after this video. But you can see here the price is above its moving averages, and so is the CCI 150. So giving us a bullish signal on the monthly. On the weekly, as I said, we've got a fresh breakout on the upside on the weekly, broken above its moving averages, and likewise the price giving us a nice bullish move. Now, normally, just for those, again, new to the channel, this CCI, normally we expect it to track in line with the price. In other words, the recent highs should exceed the previous highs, with the exception of divergence. And looking at the daily here for a minute, you'll notice as well, that's been bullish on the CCI with a fresh breakout above the moving averages as well, giving us a bullish signal. Now, we did have a slight bearish divergence here, slightly lower highs on the CCI versus high highs on the price. And that's a bearish divergence, and it hit this resistance at 40.60, and it's bounced down, and within that range between that minor support at 32.16 and the minor resistance at 38.78. Also notice it's actually starting to gravitate towards this ascending trend line after bouncing off that minor support at 32.16, but again giving us a bullish signal. Now if we go to the intraday charts, we always look at the intraday as well for those trading on the intraday, or even if you're trading on the daily, it's always worth while looking at the intraday to see if there's any pullback or divergence in play. So if you're trading on the intraday, in this case I've got the 1 hour, you take long trades only in alignment with the daily. So for example, back here you would have taken some long trades when those CCI break above. With the exception of these little areas here where we gapped up, avoid taking that trade, for example, because that way it would have probably been very minimal upside, and you want to get a fresh breakout from the moving averages of the price, and also a fresh breakout from the moving average of the CCI is ideal. You can see there, for example, if we took a long entry there in line with this daily move, you would have got in when it broke above on that candle there, and you would have closed it out when the CCI broke into that moving average range at the close of that candle. So in 11 hours of trade, you would have made 2.24% gain, which is not a bad little return. Now some of these where it starts to trend sideways on the CCI, notice we've got these peaks. Starting from that point there, we had lower highs on the CCI versus higher highs on the price. That dipped, and then it had another peak there, which is still lower than that peak there on the CCI versus higher highs on the price. In these situations, I don't trade the divergence. I just avoid going long. So even though the daily is going long, in this case, if you're trading the hourly, when it breaks out above there, as soon as you see a divergence, I avoid taking those trades. Because in this case it did actually fall off, and that pullback doesn't mean it's going to crash, it just means it's going to be a bit of a retrace, and in this case it did. And the way you measure that is you take it from that low to that high to the previous low before the divergence started, and in this case it bounced off that 50% quite nicely, and it went well below our minimum target range of 23-38% level. That's a minimum retrace level, and more than 90% of the time it hits that. In this case it broke down to the 50% level, then it gapped up. So again, avoid taking that long trade on that one because that gapped up. You would have then gone long so long as there's no divergence. And in this case, it broke up. You can see there that CCI actually still below that one there. So you probably would have avoided going long on that one. This one here started to rise, and as soon as it starts rising, it would have been a safer place to go long on this one. And you would have gone long on the breakout on that candle. and you would have closed it out when the CCI broke into that moving average range. Oops, wrong instrument. If you go to you take a long position from that point and you close it out when the CCI breaks lower at the close of that candle. That was 2.25% in 13 hours of trade. And since then it's been bearish. So avoid going long or short until we see the hourly moving in line with the daily trend. On BOIL, we've got a pretty strong downtrend at the moment on the monthly. There's no CCI drawn for it, but bearish movement on the monthly. On the weekly, we've got this continuous bullish divergence, higher lows on the CCI versus lower lows on the price. It's actually broken up above our moving average range, so you could have traded this on the daily based on the weekly, but again, very cautiously. See that there was a bit of a false break, and then it pulled back down again. I'd like to see these moving averages widen like they are now. That's a good sign. It pulled back a bit, then it's currently, this week it's currently broken higher, so it's a positive in terms of bullish movement. On the daily, you can see there it's bounced off this resistance at support at 35.98, hit that resistance at 80.01, bounced back down. There was no divergence. That moved in line with the price, and since then it's broken up higher, again above the moving average of the CCI, and also above the price. And if we go to the intraday charts again, taking long trades only, again we had a bearish divergence here, a double top on the CCI. You would have been cautious about going long here versus high highs in the price, and you would have started taking long positions here. You can see that CCI has broken that divergence. That's gone higher than that previous entry, so you would have taken a long entry on that one. And at the moment, you would have closed it out if I drew a measurement tool. So you would have got in at the close of that candle, and you would have closed it out in the last hour of trade as we record this video, and you would have made a 4% gain in 12 hours of trade on that little trade there. So for KOLD, that's broken below the moving average range of the monthly, giving us a bearish signal. There's no CCI for it on the monthly. On the weekly, it's been bearish now for a number of weeks on both the price and the CCI, and still dropping. And on the daily, that's also in a bearish outlook so far. And again, there would have been a few nice little short trades to take during that period. The going back a bit, just entering short position from that candle there, and you would have got out on that bullish candle. 18% gain in 15 hours of, this is days actually, this is the daily chart, 15 days of trade, and gone short again on that candle, and you would have got out of the trade at the close of that candle. So 17% gain in 9 days of trade, and you would not have gone long there, because remember the weekly's bearish, and you would have taken another short trade on that one. That would have been a small loss, 5% gain in a day, because it broke up into the moving average band, and take another short entry there, and you'd be in the trade today with a 4% gain so far, and close it out when that CCI breaks into the moving average band. That's on the daily. If you look at the 1 hour chart, we go short only on the 1 hour chart, and again interchanges with your own time frame, whether it's 2 hours, 4 hours, etc. Again, avoid taking these trades because you want to get a fresh breakout from the moving average band. So avoid taking that trade. Wait, be patient, and get out on a short entry there, and I've marked it there with a entry there on that candle, and you close it out on that one. That would have given you a 2.4% gain in 11 hours of trade, and enter another entry just on the close of that candle, and you would have got out at the close of that candle. So it gave you a 4% gain, just over a 4% gain in 11 hours of trade. Lastly, we'll look at UNG. Now, UNG on the monthly is still below its moving average range, but it's breaking slightly into that range there, as we see. But notice the CCI broke above its very narrow range, moving average range. So bullish movement currently, or bullish to neutral movement on the monthly. On the weekly, we still have this bullish movement on the CCI, giving us a bullish divergence down here versus lower lows on the price. And that's also broken above the moving averages of the price, giving us a bullish movement. So again, I'd like to wait for these bands, these moving averages to widen like they have here. Notice here there was a false break, but notice the moving average band was still declining. That was a false break as well. It started turning up, and then it fell quite strongly to the downside. So always be careful of these, especially in the long-term charts. So again, moving bullish move on the weekly. On the daily, again, it bounced off this support at 12.36, hit this resistance at 20.02, dropped below the moving average range on both the CCI and the price. And in the last few days, it's actually risen above the moving average of the CCI and the price. And if you're trading on the daily, you would have gone long on that candle. You'd still be in the trade today with just under a 4% gain in 3 days of trade so far. If we go to the 1 hour chart, going long only on the 1 hour based on the week on the daily chart, avoid this trade. Do not enter when it's gapped up like that. Wait for a pullback. It has done so. Then enter again on that candle. It's broken above the CCI there, broken above the price band, and close it out when it enters that moving average range of the CCI. Small trade, 1.2% gain, 11 hours of trade, but still a trade success nonetheless. And then another entry on that one, and you'd be still in a trade there, close to closing it out, but you'd still be in a trade with a 2.3% gain in 12 hours of trade. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.